Okay, I'm going to talk about one thing that's going to be a little political, but I'm going to do it anyway because I think it's absolutely a good economic read. And I might be completely worried for nothing. I know this is the wrong way to put it, not worried for nothing, but I'm going to just get it out of my head.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.laductrading.com/club.
And then you can do with it as you please. But I was asked by Yahoo Finance, for thoughts on immigration and its impact on inflation. So you know me, I kind of went in and started thinking about it a lot. It was prompted by this particular interview, okay? And it was, by the way, not a Biden proponent fan, nothing like that. So this was just my view of how immigration really helped with the timing of pulling down inflation because the labor force participation exploded and it helped make the labor market less tight. And that really helped. That's it. Okay. Really, in a nutshell. So Trump had tight immigration policy and Biden has loose immigration policy and didn't really think about it beyond that. That was it. It was just that comment and the fact that 2/3 of all new hires in 2023 came from foreign born, and most of the jobs created since 2020 have been filled by foreign born. It was just that economic commentary. There you go. So then I started digging in to this kind of, wow, wait a minute. We got an election year. Let me go a little bit further on this. Basic premise, I've already discussed about immigration and inflation. It's more complicated than that. Obviously, there's much more to it. So I wanted to think about what really, besides the immigration helping to take up a lot of the slack in the labor market, we also had energy prices come down. And there really was very much, again, even if you hate policies, very much that intervention collar that Bob talks about by the White House. And it worked. Inflation absolutely came down with expectations because of energy prices and a better balanced labor market. So I wrote about that and kind of like discussed that with her. Supply side, meaning labor participation, was really even talked about by Powell in the December FOMC meeting. Because unemployment is low, wage inflation is sticky, productivity is rebounding. That's actually a big one. We did not have that when under Trump. That was a really big differentiator. Consumer spending remains firm. Again, wage inflation is also firm, and that is helping corporate profitability to grow, et cetera, et cetera. So it's helping to kind of compensate for a lot of the macro headwinds and subpar real growth, as of course, fiscal stimulus is responsible for a lot of the job growth, right? Massive numbers of government employees have been added to the roster. Okay. And of course, central bank liquidity has been abundant. We know this, especially since the October 22 low. And that has caused the market, both equity and bonds, to keep from cracking. So then I kind of dug in a little bit more and I'm like, okay. So we got the cost of inflation under control. So if we were to do a report card on the administration, we could see that we might not like immigration policies by Biden, but it has absolutely helped to lower inflation. And the same thing with their intervention or thumb on the back, I don't know what to call it, pulse of the oil and gas companies. We know this, but it has also helped to keep that speculation out of the space, right? You can see it constantly in Bob's charts. There's just no interest. Under this administration, there's just no interest. Now, cost of higher yields, we know about Fed stepping down its rate hikes and, announcing a pause and now even pulling up rate cuts. That's all akin to loosening financial conditions, no question about it, stimulating absolutely the animal spirits of the market. And then, of course, Treasury is very, very, very focused on the cost of fiscal spending, and that's specifically monetizing the U.S. fiscal deficit through this T-bill and bond issuance, in addition to the dollar swaps with bank friendlies abroad, Bank of Japan, ECB, and then, of course, all these bank facilities, which is RRP, BTFP, all that kind of stuff. This is all very, very much the policies that have driven this deceleration of inflation. It's been well coordinated. Even if you don't agree with the policies, that has been an economic result that has resulted in a no landing, right? All because of this intervention and or policy control, and that has influenced the cost of inflation. So as we move forward, in this election year, markets will need to anticipate if the policies remain or change with new leadership and what that will mean for future inflation and, by extension, economic and market direction. So, because that's really what we're all voting for, cost of inflation control. So then I had this kind of like, wait a minute. It's kind of interesting. I'm going to take this a little bit. Hold on one second. I'm going to take this a little bit further. What happens if we get Trump? I didn't even think about that. Like, I haven't really thought about that. It's not really been on my, radar. Now it's on my radar. I actually thought about what happens if we get Trump. So I'm going to write about that, whether you like it or not. But I think that this is where we might have my 6.5% yield spike come from. What happens? And maybe we won't. Maybe we'll get somebody completely new. Wouldn't that be wonderful? But let's just go from here. If we do get Trump, what happens to the cost of labor? He is absolutely going to restrict immigration. That is a reversal of immigration policy you can count on. He is absolutely going to take the thumb off the pulse of oil and gas, fossil fuel companies and support them. That's absolutely going to loosen, right, and set free the bear of higher. There'll be great trades, by the way. Oh my God, I'll be buying Exxon and the rest. But the point is, it's absolutely going to have a reversal in this oil price complex. And then, of course, higher yields. The Fed is going to be pressured to cut. That is absolutely what Trump will want. But is that really going to help? He can cut all he wants. It's not going to fix it's not going to fix the fiscal problem. We're not even going to talk about corruption, but it is going to feed into my thesis that the US dollar has likely peaked. It's going to cause a fall in the value of the dollar. And then because of all of this, I think the cost of fiscal spending is also going to shoot higher. And that's where my 6.5% really can come into play, because Treasury holders are going to demand to be compensated for that fall of money, because the US dollar will lose value, and with it, inflation will soar. That's it. Fed will try to intervene with cuts. Treasury will try to intervene with those dollar swaps. But what if they're not there anymore? What if Trump comes in, or like Trump comes in and says, Yellen, you're out of here. And Powell, I'm absolutely not going to renew that contract. So we definitely have allies now that'll be skittish. Bank of Japan, our main ally globally in yield curve control, will be forced to remove negative rates. The carry trade will unwind slowly, then all at once. More US dollar weakness won't help. It just won't. It'll look bullish, but as the dollar falls and the everything bubble grows larger, it's going to be soon realized it's bearish. So I kind of looked at this and I went, okay, maybe it's a rabbit hole for right now. Maybe it won't be an issue at all, but it does bring to bear what happens if there is, as you can see, GOP list is getting smaller and smaller, and it only matters for the market who's on the ballot. So we got a long ways to go. Who GOP and Democrats are going to put on that ballot. That's all that matters. And then obviously who wins. But for right now, I just thought I would put that out there.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.